Hello, everyone. Welcome to the Family First webinar. So for our first-time home buyers, and we're happy to be here to share information about how to purchase your first home. And we have some experts with us in their field who can help us give us more details on how to purchase your first home. I have here with me Tom Confer.
Hi, everybody.
And he is a mortgage originator, as am myself. And so we're going to share some information about Family First, if you're not familiar, about who Family First is and how we got started and what we do and about our mortgage department and so forth. So we're going to get started with a PowerPoint. And so any questions we will save for the end. So we'll have questions and answers at the end. So we're going to get started now. Okay. So can everybody hear me okay?
Yep.
Okay. Okay, wonderful. So Tom, you want to get started with our history of Family First?
Sure. Here's a little history on the credit union. Family First is a leading financial cooperative that has been serving members since 1969. From humble beginnings as a single branch serving the needs of Penfield School District employees, the credit union has grown to 5 branches owned by over 15,000 members. Family First aims to provide secure, opportune, and innovative financial services to our members.
Family First is a leading financial. Okay, why would we choose Family First? Family First is a nonprofit organization, and we're focused on service to meet our members' needs. We are people helping people reach their financial goals. We also have a quick turnaround time. So when you work with local people, we do turn things around quickly. We don't have to ship out anything to get responses from other people. All the decisions are made right here locally at the Family First branch. Again, the whole local thing is really nice. You can always stop in and see us. You can talk to us about a mortgage. You can call us and you'll always reach us. So all our processing is done right here in Penfield, which means that we process your mortgage from beginning until end right here in the Penfield branch where the mortgage department is. We also offer lower PMI rates than retail banks. So what that means is PMI is private mortgage insurance, and that is insurance that is paid by you in your mortgage payment if you do not put 20% down. So we as a credit union offer lower PMI rates, which means ultimately that your payment would be lower with a credit union such as us than a bank.
Okay, so here are some of the credit requirements that we have. Our minimum credit score is generally 620. To get the lowest possible cost, your credit score should be 740. We do like to see that you have a minimum active number of trade lines of 3. And what a trade line is just an entry on the credit report. If we don't have 3 in the credit report, then we can develop them from other places, such as a rental history or a history on a cell phone account or internet service, something along those lines. We do review the credit over the last 36 months. So if you have things older, typically they are not as important.
Down payment. A lot of you may ask about how much money you need to put down. So for our first-time home buyers, we do have programs that allow as little as 3% down. In some cases, we require 5% down if necessary. But most times we can do 3% down for the first-time home buyer. And that sometimes is based on your income. We have a mortgage program called the Home Ready Mortgage. And this one, again, is based around the median income for Monroe County and surrounding counties. So that's how we determine if you're eligible for a program such as Home Ready, which allows 3% down. One requirement to avoid, like I was mentioning previously about the PMI, is to put 20% down. That will avoid the PMI insurance premium that's added to your monthly payment if you put 20% down. But however, if you're unable to do that, and sometimes it is difficult as a first-time home buyer, we do get those discounted rates for the PMI. We offer different types of financing. One I was just talking about was the conventional financing, but we also offer FHA, which is a government financing, and that one allows 3.5% down. And also on the FHA mortgage, they have mortgage insurance. So they have PMI, and they also have what's called MIP, and that's mortgage insurance premium. They are two separate things, and FHA does require those on all their loans. And we also offer VA, which is for the veterans. And that one, you do not have to have any payment down. So it's 0% down. And also you do not need to pay a PMI insurance premium. So that's the benefits of being a veteran. And so we do offer the VA mortgages as well. USDA. So the USDA mortgages is also a government program. That one those mortgages are available in rural counties. So we do have rural counties that we service, including Genesee County, Orleans County, and Ontario County. And there are parts of Monroe County that are also eligible for USDA. And that one is a 0% down requirement as well. And that has other benefits as well, such as reduced PMI premium. And the last one is our Sunny Mae mortgage, which we do quite a few of these. Sunny Mae actually stands for State of New York Mortgage Association. So this is a New York State loan, and it is a mortgage that allows 3% down as well. This one has a lot of benefits with it, and we work with that one quite a bit.
Okay, next we're going to talk about what costs should I consider. First of all, of course, we've talked about the down payment. For some buyers, it's at least 5%. For others, it's 3%. The other one is closing costs. And closing costs would be costs that are associated with processing and closing the mortgage. This generally runs between 2.5% and 4.5% of the amount borrowed. Taxes, real estate taxes are going to be part of your settlement charges as well, and they're going to be collected on a monthly basis as part of your mortgage payment. And those typically are going to run between 2.5% and 4.5% of the purchase price. Will depend on what town you're buying in. Homeowners insurance is another one of the costs that you'll have to anticipate. Homeowners insurance, you actually will shop around and decide where to get that. We're going to have a homeowners insurance agent coming on in a little while, Michelle Marciano, and she's going to talk to you about the homeowners insurance, and that certainly is a great place to get your insurance through. Property inspection. A lot of times when you buy a house, property inspection is desired so that you know the condition of the property you're going to be buying. So that is going to be a cost that you're going to pay for outside of your closing expenses. Attorney fee. The attorney does have a charge. So there's going to be an attorney fee that represents you personally. And this is the fee that you need to find out what that cost is going to be. We also have Steve Camerata from Dentino and Camerata. He'll be talking to us about this.
Okay, the mortgage process. A lot of you ask how does this mortgage process take place and what do we have to do? So number one, in your case, you would start with a pre-approval letter. So we need to check your income as well as check your credit. So we do run a credit report, and we ask you for pay stubs, W-2s, things like that, bank statements, as well as tax returns to verify your income, and run the credit report. And based on this information, we can issue a pre-approval letter that's going to tell you how much that you qualify for your maximum amount of purchase price that you're going to buy. So when you, that's where you're going to start first, basically, is you're going to come to us for the pre-approval, and then you would go to a real estate agent. We do have Shauna Gersh with us from Howard Hanna, who's going to talk about having the pre-approval letter and how important it is before you speak with her. Purchase offer is the next step. So basically, once you found the home of your dreams and you put the offer in and you get accepted, then you're going to work with the realtor, of course, to help you do that. But then you're going to have to choose an attorney. And we did mention we have Steve Camerata with us, who's going to talk to you about his role, an attorney's role in you purchasing a home. So the attorney can help you write the contract as well as approve it. Inspection, Tom mentioned earlier that inspection is optional. We do not require you to have an inspection done on the property, but if you wanted to have an inspection done, you can have an inspector come in and check the home over before you actually purchase the home. So after you have the inspection, you have the accepted offer. Next, you're going to start with us and you're going to put in your application. So we're going to take your information, all your personal information. We're going to have your credit report, your income verified, and we're going to complete the formal application with you. And once we have the application, we will have an appraisal done. So we do require that we have appraisal funds up front. So we can have our appraiser go out to the property and they will inspect the property and determine the value. And you will get a copy of the appraisal once it's completed. So once we have the appraisal, we verified your income, we have the credit. Next, we send that information over to our underwriter, and the underwriter reviews all this information and issues the commitment letter. So on the commitment letter, it's going to give you conditions of your approval, things you might need in order to get the final approval for closing. So next at closing, all those conditions have been reviewed, they're met, and now you're approved and everybody's happy because now you're ready to go to closing and sign on the dotted line and have your new home.
Okay, next we're going to talk about a few things about what not to do. First of all, once you've applied for a mortgage, please do not apply for any new credit during the process because that'll generate some credit inquiries that may have to be explained later on. Do not delay in submitting your loan application. As soon as you purchase the house, you want to get that contract to us so that we can start to process the mortgage. Do not increase your credit usage, which will require a reduced loan amount. So keep everything very still on your credit history. Don't do anything with your credit during the time that you have your application in process. Don't make any large deposits that are not easily verifiable. If you have money saved at home, contact your loan officer for some instructions, but don't deposit a large amount of money without explanation into your account. Don't change jobs or income sources without discussing this with Family First. It is possible an opportunity might come up during your processing, but please, before you do that, talk with us about that to make sure that's not going to have any effect on your approval. Please notify Family First of any pay increases or decreases. This is important because we do check your employment prior to you closing. Don't worry if we request additional information. Doesn't mean that your file is getting adversely reviewed. It just means that the mortgage underwriter needs some additional information. Very normal process.
Okay, so what to do? So basically work with your mortgage consultant, that would be like Tom or I, to provide all needed information, documentation to support your loan request as soon as possible. When you're purchasing a home with one of our first-time homebuyer grants, which I know a lot of you may be interested in the grants that we offer, and we're going to talk a little bit more about that later, it's imperative that we process the file as soon as possible. And that is because we have to get your grant approved through a third party typically. And so that may take longer. So we just want to make sure that you get your documentation or anything we're asking from you as soon as possible so that we don't delay the processing of getting your grant approved. So basically, we cannot request your grant funds until we have all that documentation, and we can give you detailed information later, one-on-one, on exactly what we need for the grant process.
So here's some opportunities you may have if you're buying a house. Family First works with local and federal agencies that offer different grant programs to first-time buyers based on meeting certain income guidelines. First of them is called the Homebuyer Dream Program. This is administered through the Federal Home Loan Bank of New York, and this grant offers eligible first-time home buyers up to $10,000 to be used towards their closing costs, escrows, and down payment. There's also a Monroe County grant that is available that can be applied for. This is up to $2,500 for property located in Monroe County, but does not include the city of Rochester. The city of Rochester has its own grant, and that one is available up to $3,000 for regular purchase and $6,000 towards the purchase of a rehabilitated home. You also may be able to use this in conjunction with county grants.
I also wanted to, besides for Tom and myself, I wanted to introduce Lisa Gautieri. She's joined us about a year ago. She's been in the business for a very long time. So Lisa, if you could just say hello to everybody and let them know where you are and what you do.
Hi, everybody. Very long time, 21 years. I've been here for about a year. I love it here. It's a great place. I actually work remotely and I cover Genesee, Livingston, and Orleans County for the credit union.
Okay, thank you. Okay, next up I have Shauna Gersh is with Howard Hanna, and she's a real estate agent, and she's going to talk to us a little bit about purchasing your home and her role that involved in purchasing your home.
Hello, how is everyone today? Shauna Gersh with Howard Hanna. I'm located in the Webster office. Can you hear me okay, Julie?
Yes.
Okay, perfect. So my brief history is I did used to work for Family First. Worked there for 6 years and worked in the mortgage department for 3 of those years. So that's where I started and helped facilitate some of the First Home Club and Homebuyer Dream program, and worked closely with Julie and Tom and underwriting staff, collecting loan documentation. So when I left Family First and went into real estate, I started with Howard Hanna and love it there. I can't see myself, Jules. Let me hold on one second. I feel like I'm not being seen. It's kind of confusing. Sorry. There we go. That's a little better. So one of the things I wanted to talk to you about today is market condition that we're currently in. This is a seller's market. The seller's market is pretty much moving very fast. It means that we have a reduced inventory for buyers. A lot of buyers out there. Homes are selling within, usually less than a week, 9 days. And that makes the home buying process very difficult for many buyers. I'm sure everyone has heard some, different things about the market and what to expect and not to expect. And that's why it's so important to have a real estate agent by your side to help you navigate through all of that. In our current market, we have something called delayed negotiations that's being used heavily. Delayed showings and delayed negotiations means that a house goes on the market on a specific day, and then they have a deadline for the offers on that home. Usually you'll see it run anywhere from 4 to 7 days. And that's why it's so very important for buyers to have their pre-approval ready and working with their lender to get that right away. Family First, it's ideal to sit down with Julie or Tom or Lisa and to get that pre-approval completed, all their documentation to them, as they were saying in the preview there. So once you have that, I'd like to have you come and sit with me, and then we can go over your wants and needs and discuss, our plan for purchasing. Once we sit down and get your wants and needs, I do like to get all that criteria into the MLS. I have different programs that we can use. Howard Hanna has a lot of tools, and we can use the MLS in conjunction with some of the Howard Hanna tools to make sure that we've got the market covered and what's coming out immediately, and we know within hours. And usually within an hour, the listing is updated and within the MLS. And then you have the opportunity to sign up for One Home. It's a new feature of the local MLS. And that helps you keep track of your likes and your dislikes. And you can keep notes on each one of the properties that you're viewing, which is ideal. And that information comes to me, that keeps me in the know, so I can know what you're thinking about each individual property. A lot of my clients absolutely love this feature, and it helps me to know what you as a buyer are thinking, to go ahead and to favorite an item and whatnot. So once you find a property that you love, we'll schedule a showing for that. And when you're ready to make an offer, we'll go ahead and submit it following the listings guidelines. Some homes still don't use the delayed negotiations, which is kind of nice, but with those, we need to work really fast. Most mortgages are between 45 and 60 days. So there's a lot of communication going on back and forth, a lot of documentation, as Julie and Tom were saying, and we need to work quickly and promptly. And working with a great attorney like Steve, we can definitely get that going and underway. As the real estate agent, once we put in an offer and it's accepted, I'm not done there. So I will continue with you throughout the journey, right up until closing and the day of closing, and then even after closing. So that communication is key. If anything comes up, I'm always here for you, and help communicate with Tom and Julie at Family First, and with Steve at the attorney's office. I've had items where clients have had things come up 2-3 months after closing. Not normal, but if it does, you got to know that you can trust your real estate agent and come back to them. I also offer monthly mailings and monthly emails that are staggered, and that's just to keep you in with tips and tricks on owning a home and continuing that process of what's happening in the real estate market and things that you can look out for. Other than that, everything goes right through Family First. They'll do all that underwriting, and the attorneys will get everything settled up and hopefully in your new home within less than 60 days.
Excellent. Thanks, Johnny. Really appreciate all your help with that.
You're welcome.
So next we have Michelle Marciano with Liberty Mutual, and we're happy to have her here to talk about your homeowners insurance needs and why you need this homeowners insurance and what you can expect.
Great, thank you. Can you see me okay? Or am I a little...
We can see. We can see you.
Okay, great. Thank you so much. Thank you for having me. As Julie said, I'm Michelle Marciano. I'm the insurance representative here. First off, all of you attending this, I want to say congratulations that you even took this step to be here. That's fantastic. Education is key through this process. All the people that are presenting on this call are highly educated in almost every aspect of this home buying process, and you guys will learn very quickly when you start how important that is. So I am an Allstate agency owner, and I have a team that works with me to help you all as well. My first career is actually in teaching, which is why we promote education in all the business that we do. So that just, makes you guys knowledgeable to make educated decisions when going through this entire process and knowing exactly what you need and how you're going to get in and all of that good stuff. Before I bore you with the insurance knowledge that I want to share, I do want to do something fun with you all. So after this meeting, I am going to raffle off a $50 Amazon gift card. You guys deserve it because you're on your venture. to buying a house, and that you all, like I said, you all made it here. How I'm going to do that is I'm going to have you guys all text me your name and birthday. So if you look at the list of everyone on the call, my phone number's up there under Michelle Marciano. So 585-433-5882, 585-433-5882. Text me your first and last name and your birthday. And out of the text that I get, number 11 is going to be the $50 gift card winner. And I have text coming in, so thank you guys. So again, real quick, 585-433-5882, and text your first and last name and your birthday. Okay, perfect. Again, my phone number's up next to my name in the list of everyone that's attending. So why else is it important to have my phone number? So obviously you guys would have access to my office, you'll have access to my team, but you will have my cell phone number. Reason being, anything can happen during this process, and you don't want insurance to delay the closing process. That is very important. You are required to have insurance in order to buy a house, and it needs to be done in a timely fashion, which is usually about a month or 2 months before closing. I'm usually the last piece of the puzzle, so you'll go through your mortgage commitment, your realtor, finding a house, all of that stuff, the attorney, and then they tell you, okay, now you need to get insurance. So you want to go with someone that educates you, whether that's me or somebody else. Make sure they educate you. Make sure you have direct contact with them immediately if anything changes, like a closing date. Reason being, we have to produce documents to show proof of insurance for closing, which means it just shows that you've paid the policy in full. Like Tom and Julie had mentioned, that's part of one of the upfront expenses, is paying your home insurance policy in full, showing proof of that, and getting over a binder, we call it, also known as proof of insurance. I handle all of that for you. You shouldn't be having to dig and search for any of that information. I walk you through every step of the way, as well as any of my reps handle the process the same exact way. With that being said, I want to tell you guys the 3 main reasons to have insurance outside of it being required. So obviously, number 1 is it's required to buy a house and for your mortgage, but you're also protecting your financial stability. Once you own that piece of property, God forbid something happens on that property and you're being sued, God forbid your house catches fire, whatever it may be, it's protecting you from having to pay out of pocket for those things and protecting your money. And then number 3, the most important thing, it's protecting one of the largest investments you'll ever make in your life. So insurance truly protects you, your family, your belongings, the structure itself, lawsuits, and all of that. So it's, you know, God forbid the worst time of your life happens and there's a fire, insurance is what's going to keep you moving, keep you whole. And again, you want to make sure you know the coverage you have, the options you have, and it all comes full circle. So that's what I have for today. I will contact the winner after the call. And then I'll reach out to any of you that are interested in quotes moving forward, or feel free to reach out to me via my cell phone or text message. Thank you so much.
Thanks, Michelle. I really appreciate
you.
all your information. Okay, next we have Andrea Coline from CCCS of Rochester, and she's going to talk a little bit about what they do over there at CCCS, how they can help you prepare to purchase your own home. Andrea, are you there?
I am.
Excellent.
Can you hear me okay?
You. Yes.
Would it be okay if I shared my presentation?
Absolutely.
My slides?
Yes.
All right.
So share your screen.
Give me 1 second here. not coming up?
Andrea, if you see at the top of your screen, it's a little rectangle with an up arrow
Yeah.
that allow you to share your screen.
That's the one I was doing, but then I don't
Oh.
see my, that's
I
not the one I want to show.
Oh.
That one, of course it's not. How do I get that to go now? Huh. I'm sorry. Now I can't get it. This is not the one I wanted to show, and now I don't know how to make it stop.
Oh.
Share content, presenter mode. I guess I could share my screen.
Okay.
Don't look at that. I have, okay. Can you see that okay?
Yes.
Great.
There you go.
All right, guys. Well, I hope everyone's doing okay. And thank you so much for putting on this presentation. So the role of consumer credit counseling service is we offer a lot of programs to our community, whether it's helping people with their budgeting, helping them fix their credit, pay off debts, educating them about the home buyer process, which is really going to be our focus today, or beyond. So hopefully everyone's doing well. I want to say thank you for taking the time, and hopefully you can get some good information. I know that the speakers and everyone on the call is very knowledgeable, and I love that you can just put a little bit of information in from every piece of the home buying process to educate yourself about everything. So a little bit about us. We have been in Rochester for 50 years, or actually 52 years. We've been here since 1970. Here's my contact information. So if anybody wants to touch base, feel free to shoot me an email. I can get you a copy of the slides if you like. So a little bit about consumer credit. We are a nonprofit counseling agency, as I stated, and we have an abundance of different services and programs. I'll focus really in on the home buying part of it, and that is where we really come in is helping people get prepared financially, whether it's, like I said, paying off some debt, fixing credit, educating people about the process. So we have one-on-one counseling services, but we also offer a workshop. So for most of the grant programs that you're going to be participating in, they want to have a certificate of some kind of a completion of a HUD certified training, which walks you through the home buying process, whether it's talking about budgeting for future expenses, preparing your credit, understanding the process, understanding the different types of mortgages and affordability, and just really educating yourself at a time that really works for you. So currently our office is, I believe we are open and running again. I do most of my work from home now, but we are taking in-person appointments, but we do offer sessions Monday through Thursday from 8 until 8 and Fridays from 8 until 5. What people discuss, if they do need the help, the one-on-one assistance, like I said, everybody's different. Not everybody's going to need the credit counseling piece of it, or the overview in that respect. But regardless, if we do, it works as we discuss your goal, we look at your budget, we look at your debt, we help you develop a plan. A lot of people do this because they know homeownership is a goal for them, and they need to have a timeline of maybe issues they want to clear up, or maybe they want to save more money and just prepare themselves for the program. So we offer budget and credit counseling. We also have debt management programs at Consumer Credit, and that will allow someone to consolidate their bills into one payment. And we can also help them to reduce the interest rates or bring them current if they need that. This can also be used for accounts that are in collections, and if someone needs that support to repay those bills. Of course, we're going to talk a little bit, I saved it kind of for the end, but the first time home buyer workshop that's offered, we did it in person. It would be one Saturday per month. It's a 6 to 8 hour course, but right now we're offering it online, and I'll kind of go over the details of that. We also offer reverse mortgage counseling, foreclosure prevention counseling, as well as bankruptcy counseling. So those are some of the one-on-one services and workshops. If you take a peek at our calendar as well at CCCS of Rochester, which I'll show you, we try to do a lot of different workshops just on different topics, whether it's managing student loans, whether it's something that focuses on small businesses or credit, and of course, our favorite, the home ownership aspect, my favorite. So if someone does use a debt repayment program, if they need to, as I stated, a lot of people who are looking to purchase their home, it really just depends on where you are on your journey, whether you started looking, whether you're just starting the process. But if people do need that support to repay their credit or debt, it's consolidated payments, lower interest rates, the fees stop, the calls stop, and all that good stuff. Another service that this is what a lot of people are really benefiting from, and a lot of people don't realize that this exists. So this is called financial empowerment counseling, or a financial empowerment center. So if you're interested in that kind of thing, if you Google cities for financial empowerment, these agencies are designed to partner with like a larger agency. And what it does is it puts financial counselors out throughout our city at different locations. And it's more of an ongoing type of counseling. Okay, so it's completely free. It's funded through a grant. It's partnered with the city of Rochester. You don't have to live in the city of Rochester. You just have to live in Monroe or surrounding counties to qualify for it. And it's a free one-on-one financial counseling as a public service. So whether it's trying to talk to someone to help you figure out more ways to save more money, or ways to save money throughout the month, banking, if we're looking to maybe get back on track with a bank account, or reestablish a bank account, or utilize a bank account to the best of our ability, debt, credit. And I'll tell you, a lot of individuals that are just maybe starting the journey but need that support will work with a counselor throughout the process to really help them reach that goal. Again, it really depends on where you are in your journey. A lot of people that we meet are ready to go. They're ready to go. They've been saving, their credit's where it needs to be, and they're gonna take the course, and that's really all they want from us. But of course, we'll get to that. But I know that there's people who might feel overwhelmed, and maybe they want to purchase a home, but they want to pay off some debt first, or maybe save more money. And the one-on-one counseling is a really nice partner to that, to allow you to think about the process, ask questions that we might not have thought about because we didn't realize, how things work. So this is a really great service, and there's the number for that. And then our last piece, and I'll go back to that slide, is the home buyer education. So like I said, we used to do it in person. I don't know. I'm sure we'll get back to that, but I just don't know when, because the course is usually a lot of people in one room at the same time. It's usually up to 30 people in the room. And a lot of people have been, taking it online even pre-COVID. But the course is a 6 to 8 hour course that's completed online. Some people can do it a little faster, but we say take your time. You can go in and out of it as you choose to. The cost is $40 with a coupon code of COVID22. I hate that word, but that's the coupon code. And so I can get you the link. I can even post it in the chat box if that works, to our website. So depending on where you are in the process, but if you're looking to purchase a home and you're working with Tom or Julie or Lisa, and they said, okay, you're going to get this grant. We want to set you up with this program, but we need you to take this course and get a certificate. This is what they're talking about. So we would go online, and what it would look like this. And then you would go down a little bit, which I couldn't capture everything. And then it's going to look like this. eHome America is the online website that we use to complete the course. So you would create an account, and then it would bring you right into the course. And there's different sections that you would complete. At the different organization, or I can't think of the right word, but the different people that you'd be meeting, whether it be, a realtor, an inspector, or insurance agent, the attorney, the different roles that they play. It will talk about credit. It will talk about savings. There's online interactive tools that you can use. You can go in and out of this as much as you choose. Once you are completed with all of these sessions, it will walk you through. Well, it'll give you like a pre and post test. And then once you complete that, it will give you immediate access to a certificate, which can easily be emailed to your contact to proceed. And it's some people look at it and they're like, oh, it could be a barrier. It's just one more thing we have to do. I've never heard anybody who's regretted taking the course. It teaches you so much and it walks you through the process. I mean, this is a big deal, and purchasing your first home or any home. So definitely something that we're very proud to offer. And eHome is a great resource. And of course, you have the one-on-one. So if you need that support from us, we're here to offer that. So this is what our building, we used to be right in the Gleason building, but we've since moved just a few buildings down. We didn't need quite as much space. So our location is at 1150 University Avenue, really close to University in Culver. So that is our physical location. But again, mostly everything can be done virtually, whether it's via Zoom or phone, online, whatever works for the individual. So I will say I'll leave up our contact information. I don't know how that got there, but even our Facebook page, if you go on our Facebook page or things like that, we'll try to put out updates and information and things of that nature. But anybody can reach out to us. You can go on our website. You can give me a call or shoot me an email if you have a question, and we'll be sure to get you connected to that course and address any other concerns that you need.
Okay. Thanks so much, Andrea. We always appreciate you being here and all the good information that you give to our first-time buyers.
All right. So now how do I get off this thing? I'm not really good at Teams. Am I still sharing?
No, you're good. You're
okay, awesome. Wonderful. Thanks.
Okay, we're back, and we have our last speaker, which is Steve Camarata from Dentino Camarata and Fazio, and he's going to give us some good information as an attorney, what you can expect in the first-time home buying process with the legal end of it. So, Steve, are you ready?
I hope so. Let's try to share my screen as well here.
Okay, so you're going to look at the top of your screen.
Yeah.
You see it? All right. Thanks so much.
Okay. Okay, so my name is Steve Camarata. I'm a local real estate attorney here in Rochester. By way of background, I do real estate work, contracts, banking, civil litigation as well. Graduated 2012, so I've been practicing for 10 years. And I reside in the city of Rochester. So I was a first-time home buyer myself about 3 years ago. Next. So first question you're going to be asking yourself from a legal aspect is, what is a contract? Okay, contract is anytime you have an offer, acceptance, and consideration. Can you have a contract without an offer and acceptance and consideration? No, you cannot. That's a legal statute that says that what a contract is. And there's a special term for real estate stating that this must be in writing and signed. So every time we start a deal here, we're going to have a contract in writing. And what do we use? We use the GRAR contract. This is the Greater Rochester Association of Realtors Agreement. We use this because it's well developed. It protects both the seller and the buyer, and it's recognizable by all parties. So when you're going to your agent, they're going to be filling out one of these forms. It's already been vetted and approved by the Bar Association. When we write a contract, we're going to think, what are the 5 W's and the 6th H? So who's buying and selling? What is your address and what items are being sold? This is really important, not just getting the address right, but what else might be involved in the contract? Are you buying ancillary items like furniture, or is an item potentially built in, like a hot tub or a basement bar? If these things are movable and not necessarily built in, then you're going to want to write them into your contract, or else the seller can walk away with them at closing or take them away. What are your deadlines? You've already heard a little bit about how you're going to get your mortgage, but really the question for the contract is when. What are your deadlines to get the mortgage? Are you meeting your deadlines? And when are you going to have your closing date? Where? Obviously, you know where the property is located, but where are you going to do your closing? You're going to close at the bank attorney's office. So my office is also corporate counsel for Family First. So it's very possible that you close in my office in Henrietta. You always go to where the bank attorney is, and we host the closing. Why? Well, that's obvious. You want to buy a house. And the how much. This is important to identify the purchase price, any deposit amount, the loan amount that you're seeking, and if there's any seller concessions. So work with your agent and your loan broker to determine how much your purchase price you can afford based on the loan that you can receive, as well as there's a thing called a seller's concession, which allows you to increase potentially how much money you're borrowing if the value of the house can justify borrowing that much money. This is a common question I get. How many times do I get to see the property before going to closing? Okay, and you folks are going to be seeing many, many houses when you go off and with your agent to go house hunting. And you're going to see many houses because, as we've heard, it's a seller's market, meaning there's low inventory. So when you do your first open house, you might be able to go in once or twice or 3 times to see your open house, depending on what the seller will allow you to do. But after that, once you're under contract, you're only really going to see the house 1 or 2 more times. One more time if you do a home inspection, which you may be allowed to do depending on if your contract allows it. In that case, you will hire a professional and you'll go through and check for mechanical issues or foundational issues. If you choose not to do an inspection, and as you'll probably hear very often, it's due to the competitive market, a lot of people don't, then you're not going to see the house again until 48 hours before you close. And in doing that, you're going to make sure that everything is the same way as it was when you put in the offer. There's no broken windows, the house looks the same. And if anything were to be changed, holes in the wall or anything like that, then we would have to have those fixed prior to going to closing. So when you close, it should look just about the same as it did when you first put the offer in. What do I get at closing? Okay, other than signing a whole lot of documents, what is it that you receive? You're going to receive the deed. Think of a deed like a receipt. Okay, a receipt shows how much you paid for the property, who sold it to you, when you bought it, and what it is that you're buying. You'll have a legal description. This deed is like the receipt as if you bought the house at Walmart. The only difference is that the statute requires it be in a recordable form that gets recorded in the county clerk's office so that everybody can see it. You're also going to receive keys. Only 1 key is necessary to be given to you because you just need access to the house. Once you're in the house, you can go ahead and change the locks. I think most people would recommend that you do that. But there's but whenever you do purchase the property, you should be considering that there could be other keys out there, friends, family members, agents. So really just 1 key gets you in and then you should change your locks. When is the house yours or when is it mine? That's what the slide says. There's 3 stages of ownership. The first is when you sign the contract, you become the equitable owner. That means that you have rights in the property. You don't have the right to use the property yet. It's not yours, but you have the right to purchase the property. So that seller can't go sell it to somebody else. It's called equitable title. Next, when we do have closing, you're going to hand over your check and sign all the paperwork. You're going to become the legal owner. Okay, that house is then yours. You can then access the property, go to it, do whatever you'd like. The third type is called record ownership. That's when your deed is recorded in the county clerk's office and everybody else can see your ownership on record. That's the best type of ownership, and usually record ownership occurs either the same day or next day of legal ownership. How are you going to pay for it? Okay, so at closing, you're going to come up with the money, right? And so if you have enough cash, you can certainly pay for a house in cash. But in most cases, you won't have enough cash, so you'll need a loan. Think Family First. What are we doing here? We're talking about how it is you can finance this transaction, which is likely the largest transaction you'll have in your life, or the first large transaction until you buy your second home. And so first, your loan officer will qualify you for whatever fits into your whatever program you fit into. Could be conventional, FHA, USDA, any of those that Julie spoke about. And at closing, based on whatever loan you receive, the bank will pay a check and you'll pay a check. So the seller physically receives money at the closing. Now, do I have to pay that money back? Yes, absolutely you do. Okay, I think everybody understands that. A loan note is like an IOU. I promise to pay you a certain amount of money over the course of either 15 or 30 years. So your loan note is the document that makes that agreement. You're also going to sign a mortgage, which creates security or collateral into the property. So these are two different documents. Often people think, I have to pay on my mortgage. Well, really, you're paying on your loan note, but the mortgage is the security that backs the note against the property. Another way of looking at this is think about other purchases you may have made recently. Have you bought a car? If you bought a car and you financed it, then the dealer allows you to drive away with the car, but they have a security agreement. Okay, and that means if you don't pay on your note, then pursuant to the security agreement, they can do a repossession of your car. That's called a secured transaction because there's security involved. Have you used a credit card recently? You go to the Walmart and you buy whatever groceries you might want to buy there. Well, they're going to let you leave the store with those items in hand, having only swiped your card, because the credit card company is lending you that money. And then when the statement comes out, you pay that bill, and that is when you're actually paying down on that debt. That is called, but at the same token, they can't ask you for those products back. You can use the groceries and such. You never have to return them. That is called an unsecured transaction. So what is the mortgage? The mortgage is the form of security. It's stricter than the car loan because the society has an interest in people owning homes. So that's a stricter and more secure way of securing a property. And this will be called a lien or a mortgage, okay? So long as you pay on the lien or the mortgage, nobody will bother you. But if you do not pay on it, then you can go through something called foreclosure. And that's a long, lengthy set of processes that the bank would have to go through. And there's a whole long list of rules that they have to follow. And it's much stricter than that car loan because, again, society favors home ownership. In the meantime, you can sell your home and pay off the loan. Then the mortgage goes away. Or you could refinance, which is to change the terms of your loan over time. Something we talked about earlier were closing costs. At closing, you're going to have to pay certain closing costs. This is a general term. It's flexible. There could be more or less items in being considered as closing costs. So this could be loan origination charges or financing fees or appraisal fees or anything the bank may charge you. You're going to have to pay for a year of homeowner's insurance. You're going to have to pay for that month of interest. So if we're closing a loan in March, you are going to pay the month of March today. And your first actual payment won't happen until May. You are funding an escrow account, so that way money is available going forward to pay taxes and insurance. You have to pay an attorney's fee as well as title insurance, which is a protection to you and your home ownership, and recording costs to pay for the deed and mortgage. What does your lawyer do for you? What we're going to do is we're going to review your contract and approve it. We're going to review title to make sure that what you're buying is good product. There's no liens, judgments, foreclosures, anything like that against the property. We're going to keep the timelines of your closing to make sure you buy when you want to buy. We're going to attend closing with you, make sure you understand what you're signing. We're going to provide you a closing statement to accurately account for all of your costs and expenses. And we're going to obtain a final title insurance policy, which shows that what it is that you're buying is what you expected to buy. And that is a marketable product and nothing with any other creditors or liens or anything. So some key terms we have here, it turns out they all start with C. You have a contract date. You've got contingencies. Those are to get your mortgage or inspection or things like that. You have a commitment date, which is the date by which you're going to get your loan from your lender. The commitment letter is the lender approving you for the loan and giving you an interest rate. The clear to close is when the lender finishes what they need to do and allows us to go to the closing table. And the closing date is when property transfers. And to recap the legal documents, we got the contract, the deed, the loan note, and the mortgage. So that kind of wraps everything up in 10 minutes. I hope I've possibly answer some questions you may have, but I think we'll open it up at the end. Right, Julie?
Yes. You know, I really like that, Steve. I like how you simplified the terms and the process. It really makes it more understandable for all of us. So I really appreciate you speaking about that. So yeah, now we are going to open this up to any questions that you may have. We'd be more than happy to answer any questions. You can either get yourself on audio, or you can send a message to us. And at the top of your screen, you should see a bubble. If you click on the bubble, you can type a message to us and we can respond that way. You can look at your question that way, or you can, like I said, put yourself on audio and ask a question that way as well. So I'm going to open it up to any questions for any of us, either Tom, myself, or any of the speakers who are still on here, and we'd be more than happy to answer those for you.
Hi, I had a few questions. My name is Ariel Jackson. How are you?
Good. How are you?
I'm doing good. I tried to take as many notes as I could. One question I had, maybe because I watched too much HGTV, but let's say you go to, in the past, I went to go look at houses. I was considering home buying, and it seems like the houses were just flying off the shelf. Long story short, I had none of this in place, but it made me think of some questions. Let's say you see a house you want. You looked at like 5 houses that day, and they're saying there's offers. You want to put in on that house as well. And then you go to another home and you're like, oh my gosh, I like this one too. So if that one doesn't go through, can I also, put an offer on that house? How does that particularly work? Because you may be seeing different amounts and things obviously change, and you guys have to provide a maximum amount that you would allow.
That is a really good question. Because I wondered that myself. Not real estate agents here, but we do have. Sean, are you still on the
I am.
Okay. So in this situation, she says, if you see several homes and you like one home and you decide to put an offer in on it, let's say that you look at another home later on and you decide, oh goodness, I really like this one better. What can you do? What is the way you can handle that?
Well, that would certainly depend on a couple of different factors. With the delayed negotiations, sometimes what happens is one will be before the other, and that'll give you the opportunity to put an offer in on one home, and then if the second home is equal and you like them both, and the second home is a day or two later, then you can wait to see how the first home does, and then the second home you have the opportunity to also put in an offer on that one. Now, in the unlikely event, let's say both of the homes needed to be on the same day, you'd really have to make a decision. You have to decide, how many. We can always call the listing agent and find out how many offers do they have in hand. If there's a price point difference, we can go off from that based off from what the buyer's pre-approval is, where is this house, what's their price point for listing, and where do we think it's going to go based off on comparable sales. So there's a lot of things that we can look at. If you've already put in an offer on one home and you find that you absolutely love the second home, but the second home's not guaranteed until you have an accepted offer. But if you're like, absolutely not, this is the one I want to go for, and if that's the one that I can't get, then I'll have to continue looking because we've missed the window on the first home. So it really comes down to specifics on the home. If you've put in an offer and you like the other home better, you can always withdraw that offer.
Oh, that's kind of what I was wondering.
Okay.
Okay, Steve, do you have anything to add to that in a legal sense in regards to, putting an offer in and then coming in later and maybe the same day and putting in another offer?
Sure. So remember that the contract is not created until there's an accepted offer. So if you were to go house hunting and you come up to a second property that you like better than the first, then by withdrawing the first offer before it's been accepted, there's no fear of ever having a contract. So that's the safest bet. If you did come into a situation where you did sign that deal, which was accepted, and then you do sign a second deal, which is also accepted, there's a contingency in the contract for attorney approvals, where the attorney can then speak to you and say, which one is it that you want? Why did you make this decision? And we don't like to use that as a tool necessarily, that, allowing people just to put in offers whenever they'd like. But sometimes people do get mixed up and they sign something that they didn't want to sign. And that's why the attorney approval provision allows for your attorney to cancel a deal which maybe you didn't purposely enter into. Could also work both ways. The seller could do that to you as well. If they receive a better offer that they didn't know was there, they could reject yours based off the attorney approval.
Okay.
Okay, great. Thank you both, because that's a good answer, because I was curious myself. We have a question that came in, and it's asking, how long do our pre-approvals last? So the pre-approval letter that one of us as originators would issue to you, and ours are good for 120 days. So 4 months from the time that we give it to you. So the reason behind that is our credit report expires after 120 days. So in that sense, in 4 months, you could purchase a car, you could do different things that would change how you would qualify for that particular home that you're looking at or so forth. So that's 120 days for that. Anybody else?
I have a question.
Okay.
Going off of that, with the pre-qualification letter, because I was pre-qualified through one bank. If I went to another bank to get pre-qualified, will that affect my credit? Seeing as how you said it doesn't affect it for 120 days. Is that correct? Am I understanding that right?
Actually, what it is the pre-approval letter that's issued is good for 120 days. But it doesn't necessarily mean if you go to another lender and get another pre-approval letter, it can affect things in a sense that they're probably pulling a credit report as well, because that's what's required for a pre-approval letter. And if that happens, we cannot guarantee that your credit score will not change. And typically, if it's pulled more than several times, it'll change for the worse for your credit score. So, Tom, I'm sure you can agree with that.
Yeah, I would say you're probably better served by just kind of picking the lender you want to work with and going with that pre-approval letter. You don't need numerous ones typically as you go through the process from different lenders. If you decide to use somebody other than you got the pre-approval letter from, you can always do that. The approvals are relatively standardized, so typically if you're going to get approved one place, you should also get approved at the other, as long as you don't change things. So I would just stick with one lender on those pre-approvals.
I do have to mention one quick thing, going off what Tom said, is that I have had some first-time homebuyers that have gotten pre-approved elsewhere and then found out through friends or family or another way, such as this seminar, that we offer the Homebuyer Dream Grant, the grant for $10,000, and then have come to Family First after they already had a pre-approval elsewhere that didn't offer that. And I would never turn anybody down. I'm always going to issue another pre-approval. However, I do have to run my own credit report. I cannot use somebody else's. So therefore, I can issue a pre-approval letter as long as your credit still is, as long as it's still qualifying. Does that help?
Yes, thank you.
Okay, you're welcome. Okay, we got another question that popped up. How long is the Homebuyer Program training certification good for? That's a good question also. And so Andrea from CCS was talking about the Homebuyer on the online course that you need to take through eHome. And that certificate is good for 18 months. So if you take the course this year, but don't end up buying a home, you can always probably use it again next year. I see another question, and these are all good questions. Is there a limit to the grants that we can use?
Yeah, to start with that, it's going to depend a little bit on the mortgage type that you use. If we're using a conventional mortgage, we can only allow 105% of the sales price to be financed. So if you go beyond that, then there would be a limit to what the grants can do. Sunny Mae is a little bit different. They will allow us to go up to really any loan to value. So you could conceivably have a couple of different grants with each other, connected to each other. So that one is possible to go up really without any ceiling to the loan to value, the percentage of the house that's financed.
Yes, that's a really good point. We are working with Sunny Mae. We do the Sunny Mae financing, and that one, as Tom mentioned, you can use multiple grants without a limit. So we do that here. So it really helps people come up with very little at closing.
I have another question. Sorry, I have a million of them. So let's say you're going for a home loan, you get approved, and then you decide, I'm done with New York, and you want to move to Texas or someplace beautiful like that. Then what? Is that loan null and void because it's a different state? And I don't know if you guys have a bank down there or not. I'm assuming, I don't know.
Good question. So here at Family First, we have a charter and we can only lend in specific areas. So that's just, we're speaking for ourselves. And so we lend in Monroe County and surrounding counties. However, so in the case of moving out of state to Texas, that would not work. Also with our Sunny Mae mortgage, that is a state of New York mortgage. So again, that's just for New York State. So, and also some of the grants are only eligible in certain areas, such as the Homebuyer Dream Grant is New York State, New Jersey, Puerto Rico, and the Virgin Islands. So you got to really be looking at where where you're going to end up. And sometimes you may want to call a lender in that state.
Yeah, I was just going to add, we can lend anywhere in New York State. That's not a problem, but outside of New York, that's limited. Yes.
Thank you.
You're welcome. Anything else? I wanted to mention, because we do have a lot of folks who are interested in the Homebuyer Dream Grant, and I just wanted to let you all know that program begins on March 21st, meaning that on the 21st we can submit for the grant on that particular day. And how we do that is you need to be in a purchase contract at the time that we submit for the grant. So we would have to submit an executed purchase contract, the certificate of completion of your online first-time homebuyers course, and we also need 30 days of your most recent pay stubs for the pay stub W-2 earnings people. For folks that are self-employed, we would need your federal tax return and possibly other information. But just so you know, in order to get into the Homebuyer Dream Grant, that is how we do it. We get you pre-approved first, then you qualify, then you go get into an accepted contract, and then we can submit for the grant. So I wanted to let everybody know that, because we used to have a program prior to that where it was set up a little bit differently. And so I just wanted to let everyone know that that's how the Homebuyer Dream Grant works. That's the one for $10,000 that we do have here at Family First. And that is an income-driven program. So we have income limitations on that based on the amount of folks earning income in your family and your household. So I just wanted to clarify that if anybody had questions on that. I had a question here. Would refinancing a car count for the new credit established? Okay. When you want to answer that one, Tom, about refinancing a car?
Well, refinancing a car is, certainly going to be a type of credit that we would look at. It doesn't look like there's any great benefit from that, I understand. Obviously, you would have had a car loan before that point, and then you're just refinancing it for more preferable terms. So it'd be a continuation of the car loan. So it's viewed overall as a credit reference, but it doesn't really impact your credit to any great degree.
Okay. And I had a question, are the slides from the guest speakers available to us? Yes. So we are recording this and we will provide it to anybody who's interested. So just let us know and we can we can send it to you. It's possible we could put it on our website, not sure, but we can definitely send it to you in an email. I just have someone who's typing a question, so we're kind of just waiting for that to pop up to answer that for anybody. If anybody else has anything else, we'd also be more than happy to take any questions. Email, you can call us. If you have any questions for the speakers and you missed maybe getting their email, phone number, of course, we can always provide that information. Also, you know, we can definitely send you any information. If you are looking to purchase a home, we can send your information to Shauna over at Howard Hanna. If you're looking for the insurance, we can send you the contact information to Michelle. I know Michelle is going to reach out to the winner of her raffle that she had later on. And so good luck to whoever had texted Michelle their phone number, because she's going to be calling that person with the winner. So anyone who needs to get on a budget, they feel, or has questions about their credit and preparing for purchasing a home, Andrea at CCCS was more than helpful to help you. And Steve Camerata with any legal questions, anything regarding purchase contract. He had a lot of good information there. So everybody's available. And we have all their contact information if you missed anybody's phone number or email. Okay, yes, and I do see a couple of people have requested the video, so not a problem at all. We have everybody who has RSVP'd to this webinar. We have your phone number, we have your email that you provided us. So we really appreciate everybody listening to us today and taking this information, and hopefully it's very useful to you purchasing your first home. We'd be more than happy to help you with that. And feel free to reach out again. Like I said, if you want this video, if you have any questions, we're here for you. But we really appreciate it. And we really thank you for spending this afternoon with us.
Yes, thanks so much. Thanks for everyone attending.
And thanks so much. And hopefully you'll find the home of your dreams. Thanks so much.